step up our game. Right? I agree. Stepping up the game. How can you not do that? Hey, welcome to the closing beat, everybody. Happy Thursday. How you doing out there? Ooh, harsh on the light today. Hey, welcome to our show. We're financial advisors here at Jazz Wealth. We do things just a little bit differently. We're weird, but hopefully you think we're pretty smart. I like to share data with you here that is different than what you normally see, and we're going to do that here today. Also tonight, joining us over in the Speakeasy. That's what it looks like, if you could see over there. The Speakeasy is right over there. That's the one that's public anyways. We're going to be doing our Wine and Wealth class, and Mr. Eric's going to be joining us. Eric got COVID, just out of nowhere, man. Tested positive for COVID, so he'll be at home. We made him stay at home, so we're going to try to do that remote thing where we still work together because we don't want to cancel the class. It'll be Eric's first class. He is feeling fine and ready to go. So bring your questions. We'll talk about anything. We do have a couple things we want to talk about. But if there's things you've been meaning to ask, he's more on the planning side, really geeky when it comes to that stuff. So you'll get the best of both worlds tonight. And if your financial advisor is not keeping in touch with you twice weekly, yeah. We do Wine and Wealth class on Thursday. We do our Notes from Jazz email on the weekend in case you can't make it to the class. And we update you on everything twice a week, man. Not that there's always something to talk about, but we try to help keep your dough straight. So I hope you check us out at jazzwealth.com because, well, like I said, we're weird. We're different. We like to do things a little more laid back, but we take your dough seriously. Anyways, we've also got the FinTips videos going out, yada, yada, sales pitch. Check us out on youtube.com and subscribe, like, all that good stuff. Let's get on to the good stuff, man. Let's talk about the markets here. S&P. Yeah, those numbers are right. The S&P is now down about 18% year to date. It was a little bit worse earlier, if that makes you feel better. We had come all the way down to these lows here first thing this morning, and then it just kind of seemed like people were like, yeah, I don't know, this is close enough, right? We're close to the 20%. Let's go with it. What happens if we don't fall that much? It sort of felt like that was what was happening rather than, oh, no, I don't want to buy this after what happened yesterday. I'd say the morning started like that, and then the afternoon, people got choosy with what they wanted to buy. If you look around the S&P here today, you could see money going towards NVIDIA with about a 1% gain on the day. Let me just refresh my page here, get this a little bit straightened out. Money going there, but not so much Apple. That is starting to look like a waterfall drop there if you like playing discounts on Apple. Broadcom saw some weakness, but you had PayPal, which was otherwise has been a very weak stock. That one got a little bit of a bounce today. Intuit. There you go. A little bit of a bounce. These are the stocks that have been weak overall. They got a little bit of the attention today, so not too bad there. Retail stocks like Estee Lauder at least took a shot because other retail stocks got absolutely crushed. TJ Maxx is where it's been lately, man. After earnings there, everybody's been excited about TJ Maxx, and for the most part, people are taking a shot at this recent pullback in healthcare. So if you like the healthcare stocks, you got to be a little bit of a stock picker here, but here's the sector. You can see a nice little pullback and it's attempting to bounce, but you've got to be particular if you're going to go hunting over there. United Healthcare, Humana, those are some interesting ones, but when you start looking at CVS, not quite yet, right? You still got a little weakness going on there. So I don't want to paint the picture that, that was a great, strong area. Rails were down on the day as well. And then it was just kind of spotty from there. Like in financials, you had Goldman Sachs higher, but you had Visa lower. You had S&P Global, anything related to the stock market exchanges themselves, they were higher on the day. But bigger banks and brokerage firms, they were lower. Schwab, of course, being one of them. So that's kind of where you stand. As far as the S&P goes, I'll use the SPY so you can follow along here with me. It really seems like the S&P is going to be okay with being down 20%. Said that yesterday. It's just kind of like people have thrown their hands up in the air and said, all right, I'm not going to do anything until then. until this afternoon. I mean, this afternoon was at least a little bit of a shot, like I mentioned there. Other than that, no one really wanted to step in after a day like yesterday. Yesterday is what's known as an all and nothing day. So typically you say all or nothing. Well, in the markets, there's something called an all and nothing day. What that means is when all of the action happens yesterday, that means nothing happens today. Here's a great way to show that for you. If you're interested, I use the research platform to check this out. I went in there and put, when the S&P loses more than 2.5% in one day over 30 years, what's the next day look like? Well, if you go over here to the right, and any of you that are research members or clients can do the same search, we'll say, well, when it falls 2.5%, which would be odd, that is not normal, although it seems like it's normal right now, that would be odd. It's actually happened 168 times, and the next day, the average performance is only 0.5%. That's it. 60% of the time it's positive, 40% of the time it's negative. Median gain is 0.39%. Nothing, right? So you had all the action yesterday. These are all the days over here. You can put them on a spreadsheet. And then the next day, you've got some good days and some really bad days, but ultimately they're just really quiet days over the course of history when that happens. In other words, it's like if I punch you in the face, you're probably not even going to flinch, right? You just have a bad day. You're like, that sucks. Why'd he punch me in the face? But if Mike Tyson punches you in the face because you won't leave him alone on an airplane, you likely aren't going to get up and walk away right away. You're going to be a little woozy for a minute. Well, when the stock market gets punched in the face by Mike Tyson, the next day tends to be a little woozy. That's kind of the fancy way, my clever fancy way of saying it. Okay, so that's that. If we go on over to the other areas of the market here, the NASDAQ is the worst performing out of all the indices, down 27% year to date. Half of that, by the way, has come in the last month. So if you've ever thought like, this is pretty scary, right? Over the last 30 days, you'd be right? You got about 14% losses over the last 30 days. That's impressive there. If we look at the Dow, that's the best performing in terms of not falling the most. It's only down 13% year to date. Still not pretty, but at least it's not as bad as the others. And of course, the S&P is flirting with the 20% area. 11% of it has come in the last 30 days. So that's where all our action is. Yes, the year has been bad, but it hasn't been as bad as the last 30 days because that's where all the action has been. Looking around today, you've got gold a little bit higher, trying to bounce off this low. We talked about that yesterday. Anything gold related, very extended and hoping to try to get a little bit of a bounce. Also finding itself at known support areas, whether you're using the physical gold, you're using the GDX back to support. You could use ETFs like GLD. It's the same thing as the futures market there. Newmont, also trying to bounce. All of these stocks find themselves right at a good support area. So likely just the technical traders taking their shot there. Oil prices, you got a new national average high for gas prices out there, thanks to good old price of oil. And California, boy, poor people over California. The state's national average in California was $6. Georgia now over $4. The state of Florida here for $50. It's getting worse, and it's actually pretty sad because supply is being shown to have built up in Oklahoma. All right, so we got that data yesterday. So you got a good amount of supply showing up, but all of a sudden the price of gas is going higher. Nobody's talking about actually trying to get it lower. Think about what the Fed's doing right now. Inflation is high, and so they're all out there going, we are going to stop inflation. Aggressive, like bad parenting type talk, where they're like, we'll raise rates 1,000,000 times if we have to. We will not stop until inflation goes lower. A lot of times just talking about it helps people wrap their mind around it and they start slowing themselves down. Notice how the Fed's been able to do that pretty successfully. They keep saying, we'll go up another half point, we'll go up a half point, whatever. But that's not coming out of Washington at the moment. And so that's why you can't say that oil is going to fall. There's no good reason. We're going into our summer high demand season. But in Washington, they don't even say like, we're going to work with oil companies to get them to drill. We're going to get them excited to drill. It's going to take some time, but that's fine. We're going to incentivize them without using money, hopefully. But we're going to make it that, yeah, they have 2 years where we won't bother them or something. We're going to get gas prices down. There's none of that. They just kind of say like, oh, you know, if it weren't for this war, you know, gas prices would be lower. I think that's the wrong approach there. Sometimes it works where you can talk the price of something lower or higher if you have enough power. And by power, I mean the Fed or Washington, right? They've got the power. So that's a little frustrating there. And I think at some point, as we get into the election season, they're gonna start talking more about trying to get aggressively about trying to get the price of oil down. I could be wrong, but that's where we stand. So gas prices will inevitably be moving higher. There's no, just like the stock market has no catalyst to move higher at the moment, oil has no catalyst to fall. I mean, it's kind of clear skies for the moment there. So that's what you have. All right, as far as the overall factors of the market today, I don't know if that's something you're into, but small cap growth was where all the excitement was. Value has today was worse than growth. And this brings up a point here. So I'm going to talk about something real quick when it comes to growth and value. So there's always a discussion in the media, do I growth or value? Are you a growth investor or value investor? And if you are one or the other, are you better off than the other side? Why is it always got to be if you're not one, you're the other, right? So here is a chart in black showing the growth factor of the market. So any growth combinations of stocks there. I use the ETF IVW to show that. IVE is your value ETF. Well, you could see that since COVID hit, growth was the way to go. And that was an easy one to see. I mean, you could just see all these growth stocks just going nuts, right? They all had amazing moves. Well, okay, so that was all very, very well. And they make fun of the value investor and say you're wasting your time. You'd be better off just investing in an index fund and just calling it a day. Well, now what's happening is they're starting to say value investors are kicking butt, right? They're beating the growth. It doesn't mean you have to switch to one or the other. And in fact, it's not that value is beating growth. It's that growth has pulled back so much. If I zoom in here and I say, okay, over the last year, let's see what's happening. Value, that value factor of the market didn't do anything. It's been pulling back just as well, right? But because growth has pulled back even more, it makes it look like value investors are better. So don't fall for that trap where they say value investing is doing better right now versus growth. When it's only doing better because it hasn't fallen as much. It's not doing better because all of a sudden it's taken off. That's a little frustrating how they talk about that, because it makes you feel like you need to switch your investments, when in reality, it's just that you're temporarily underperforming value. All right, that's all I got for that one. I just wanted to point that out to you. Let's go to new highs and new lows. We'll get ready for our wine and wealth tonight. There's only one new high today. That one new high was in the energy sector. I bet you could have guessed if I'd have had you guess which sector had the highest, had the one stock that made a new high. And that would be NRG. Quite strong, actually, very extended in the short term, but it continues to move higher. There were 65 new lows. It was a lot of retailers, right? It's a rough time for retailers right now. If we look at something like Best Buy, it's rolling away, but man, old Best Buy is nice and weak there. And this kind of goes into their supply chain. And think about this, because we'll talk about Kohl's and some others in a moment. Walmart and Target basically let us know that supply chain's an issue, but inflation's also an issue, right? Who handles inflation and supply chains better than Walmart or Target? Is there a retailer out there that has more experience and that has a larger distribution network than those two? Probably not. Not that I can think. I mean, an actual retailer, not like Amazon. But is there one? No. Those are the big dogs, right? So if they're having problems, it should be no surprise that Best Buy, Bed Bath & Beyond, Ralph Lauren, Kohl's, that they all say, yeah, we're having the same problems. It's just our network is smaller. We have a little bit less power. And so, of course, we're having problems as well. Anyways, Best Buy was one of them. It broke to new lows, and one of the reasons why. Ralph Lauren also doing the same thing. I just said that, didn't I? Yeah, actually. Walmart continues to be a little bit weaker, but slowing down really here. You had a lot of attempts at picking the bottom on Walmart. Same with Target. In the morning, we had a little bit of an attempt to try to pick the bottom. This is like Walmart's second day, right? It's doing the same thing. So Target's big day down. Today's the second day. Walmart has a big down day. The second day was nasty. Walmart's just one day ahead in this case. That's all that's going on there. Stocks in the news. There we go. Stocks in the news. Under Armour's losing their CEO. He is headed out there. So I don't know who the new person was coming in. I don't know if that was even announced. But he's stepping down. The stock was down by about 11% on the day. Tesla in the news. Pretty much always in the news. National Highway Transportation and Safety Administration says we're going to look into a car crash that happened in California. Killed 3 people, I believe. Yeah, that's basically it. This happens. This is just heightened by the fact that it's Tesla, because we want to know if it was from their self-driving mode or did these people just crash. So we'll see. I don't know. It's not something I really follow. Kohl's in the news for earnings. So Kohl's says, just like Walmart, right? Sales were a little bit weaker. Earnings were a little bit weaker there. We're going to lower guidance going forward because we're not sure that we can do this here. They're also finishing up on getting final bids to be bought out. So they're up for sale if you want to buy Kohl's. Now, I don't know if I've ever shopped at Kohl's. I don't think I have. But what I found interesting, I was reading through their earnings report, the men's department was the killer department, right? So dining wear, cookware, not so good. You had lower sales there. Children's department, not so good there. Men, what are you doing? Y'all are out there shopping at Kohl's. That made me think, like, are there good deals at Kohl's? Like, did the guys figure something out? And here I am just picking up stuff at Old Navy or wherever I go. Maybe I need to go to Kohl's. Anyways, that was their lifesaver this last quarter, was the men's department there, sales-wise. Anyways, Cisco, they had earnings come out there better than expected there. They had a lot of negative forward guidance due to China being shut down. They get a lot of their stuff from China, and kind of easy to see that if China shut down or was shut down, well, that's going to hurt them, and it did. They were very clear about that, and they were also uncertain about, we don't know if they'll do this again, right? So it could affect us going forward. There you go. You got Bath & Body Works here, better than expected earnings. They had to lower guidance as well. Supply chain issues, inflation issues. They're all saying the same thing. Retailers have united and are saying the exact same thing in all of their reports there. So if you don't like reading through earnings reports, just know you're probably not missing much if you read Walmart's report. Foot Locker's tomorrow. John Deere's tomorrow. And that's it. Yep, that's it. All right, I'll take your questions if you have any. Otherwise, wow, that was quick. We'll get ready for tonight's class with Mr. Eric. Looking forward to that one there. We'll see how he does. Grab a drink, come hang out with us. Grab a glass of that jazz wine. Oh, I don't have the jazz wine around me here. Louie, go get me the jazz wine. You like the Kohl's men's store? All right, It's funny that they probably do market to me. I probably get stuff in the mail and stuff, but I never thought about it. And then I read that and I'm like, the guy's department killed it. These brothers know something I don't, man. I need to get into Kohl's. So I might have to find one and check it out. Thanks, Edmund. I appreciate that. It's because you found your place. Enrico's like, we found Kohl's. That's where they have everything I need. They got the shorts with elastic. There's no buttons. Okay, cool. I'm in. Enrico knows, man. I did try to buy some crude futures, but they told me I don't have an actual place to hold the oil. They don't accept my house as good enough spot. Yeah. So I'll take that as a joke. When you buy oil futures in a brokerage firm, when you sign up to trade futures, you actually are agreeing that you will not you're not going to be in a position to take delivery of oil. They will not allow that to happen. So it's a fun joke that people like to say is like, I bought so many barrels of oil, but you would never actually be required to take, a bushel of corn or something like that. The brokerage firms don't allow it, actually. Yeah. Okay. All right, look at that. Have you ever been to Kohl's, Cody?
No, I was actually going to say, where is one?
I don't know where they're at, but we're going to find one. Okay, I'm in, man. J-Dub says quality for a relative bargain. I like quality and I like a bargain. Okay. How about that? Oh, Dave says it's a mess. Kohl's. All right. Back to the dollar store. I'm the one by our house, Marshall's. There's a Marshall's. They always have what I need, man. And I just, it's the one where you go in for like shorts or something, and I end up leaving with like one of those office grass putting machines or something. Like, new suitcase. Little soap dish for the missus so she knows I was thinking about her. Ross, yeah, same thing. They'd get me there too. I don't think we have one by us though. Oh, got a suit, huh? Wow. Evan, do you think the U.S. will lose the reserve currency? I have no idea. I have no idea. That's a tough one there. I know there's been a little tugging at that from some of our other countries over there that are sometimes friends and not friends. But I don't know. I honestly don't Don't know the latest and greatest on that. SoFi, you are right. Yeah, a little SoFi action there, getting it back up to about 780, which is the prior resistance area there. We'll see what, I mean, if it can plow through tomorrow, that'd be a good sign. Yeah. Yep. You're right. Marshalls does fall under the TJ Maxx brand or TJX Company's brand. Kohl's is the rich man's Marshall. I mean, but if you're getting a little more, a little more quality there, maybe. I've never known bad quality like from Marshalls. You know what I mean? You just kind of get what. I don't go there to try to impress people, I guess, but I will check it out. I will check out Kohl's. I definitely will now. Got to find one first. You think the housing market will come down in the future? Well, so kind of a broad question. In the future, yes. There will be a pullback in the housing market. I mean, that's an easy guess. Will the stock market come down in the future? Yeah, of course. I'm being sarcastic there, but it currently, if you're out there looking for a home, there's this really interesting gap where prices are still somewhat high, very high, some could argue, and depending on where you're from. So prices are high, but rates are high. So now you have this gap where people are saying, I'd still like to sell my house, but I don't know where I'm going to go. I can't really lower the price because I've got to pay a higher rate for a higher priced home. Sorry, Louis, man. Sorry about that. That was my bad. And then you have buyers going, why don't I wait and see if prices go down? So you see the inventory starting to rise, right, from homes that are still there, but there's going to be a suck on both sides, both people that don't want to sell anymore and people that don't want to buy anymore to some degree. Now, what that generates in the housing market is not a crash. It generates a reset in prices, really. It just generates buyers and sellers that need to come together a little bit better. Could it be that rates help us out if rates continue to move lower, which they are over the last couple of days at least? Certainly, right? Get people back in the water to buy and sell houses. But I don't see a housing crash here. Old Navy's not the place. I don't know. Jeez, I was just throwing names out there. I mean, honestly, the last time, I can't even tell you what store. I don't really even shop. I just show up and my wife's like, I got you 2 pairs of pants. Try them on. If you don't like them, I'll fix them. I don't know where she goes actually, but I know I was a Marshalls guy for a while. And Old Navy. Old Navy's gone downhill. Oh, man. Yeah. Harry's kind of got the idea. You got home prices. People that are like, oh, I can get $1 million for my house? Yeah. Oh, wait, there's not a lot of people to buy them anymore? That's not the case here in our area. Definitely not the case, but maybe in your area. Yeah. Oh, that's crazy, man. We don't have any Kmart's here anymore. There's only one Kmart open. There's only one remaining Kmart. I forget where it was, but I read that article and I'm like, okay, sucks for them. Yep. It's been shown businesses suck at pricing single-family homes. See Zillow. Zillow's not very good. Yeah, I'll give you that. They're fun to watch. Zillow is the sort of equivalent to the stock market, in my opinion. You watch your house. Who cares? Your house changes value in 30 days. Like, okay, what does it matter? But because you can look at it every day, does it drive a little something in you? Whereas you can look at your portfolio every day and you're like, well, realistically, what are you going to do? You're not going to do anything in the course of a day. Over here, your house has changed value. What, are you going to sell it? So, and plus I've heard they're, not that accurate. I don't know, but just saying. What do you think of the Amber Heard and Johnny Depp court case? Cody, you got any opinions on that one there? Are you up to date on the court case? Team Johnny Depp over there? Did you know who Amber Heard was? I'd never heard of her. She's an actress. Never heard of her until this, and I'm like, well, I don't know. Well, I mean, they both have some personal issues, it would appear, but as far as the main argument of what Johnny Depp is doing and fighting her making that article, seems she put the article out there. She published it. She tweeted that she published it. I don't know why this is the case. I don't know. Now, who she is, or do I care if I don't even know what's up for grabs here, but I don't know. You got me. Cody's team Johnny Depp, though. I'll study up on it. I'll let you know tomorrow, right? You get canceled for liking Johnny Depp? Oh, no, I don't know. Why? Controversial. Oh, okay. Well, you've been outed then. Good luck. Good luck. All right. Yeah, I don't know though. I'll study up on that and let you know. Let you know Monday. Right? Can't be that hard. I mean, what are they arguing about? All right. That's the point where we start talking about things that are not related to the stock market, where I usually say, okay, I love it. I'm going to wrap it up here. We'll see you in a little bit. If you're one of our clients or research member, we'll put it up there as well. Right? You can do that. Yeah, it'll be up for research members as well. Join us tonight with me and Eric, and we'll just talk. We'll just hang out and go until he doesn't feel like it anymore. It's his first Wine and Wealth tonight, so see what he's got to drink and see what questions you have for him. Enjoy the rest of your day. To the rest of you, thanks so much for watching, and truthfully, thank you for giving us a shot at Jazz Wealth. I know, it's a little bit weird sometimes, but hopefully you're enjoying it, and we'll keep it up here. See ya.